Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets that move the market. Today we are diving into a report from Diversified Healthcare Trust, and let me tell you, it looks like they are getting ready for some big moves and have some important financial instruments on their books. Alright, so what is this filing all about? Basically, Diversified Healthcare Trust, or DHC as we might call them, needed to file a current report to let everyone know what is going on. Think of it as a quick update on important events. The main date here is the 8th of December 2025. This is the day that whatever is in this report is considered to have happened or been made public. This is an 8K filing. These are typically used for significant corporate events that shareholders should know about right away. It is not a regular report like a quarterly or annual one, but rather for material news. Now, let us look at what is registered with the stock market. DHC has its common shares of beneficial interest listed, trading under the ticker symbol DHC on the Nasdaq stock market. They also have some debt, specifically 5.625% senior notes due in 2042 and 6.25% senior notes due in 2046, both also on Nasdaq under tickers DHCNI and DHCNL respectively. This tells us they are a publicly traded company with both ownership stakes and significant borrowing. This part is where things get interesting from an informational standpoint. On the 8th of December 2025, Diversified Healthcare Trust actually put out an investor presentation and made it available on their website. This presentation is attached to this filing as an exhibit. So this report is essentially telling us that there is new information out there for investors, and it is in the form of a presentation. This section is like the appendix of the report. It tells you what other documents are included with this filing. Here it is, Exhibit 99.1. This is the investor presentation itself. This is where we are likely to find the meat of the story for this filing. Because this is an investor presentation, it is designed to present information in a way that is appealing and understandable to investors. We can expect to see key financial highlights, company strategies, and possibly updates on their portfolio of healthcare properties or operations. Now, to give you a bit of context, Diversified Healthcare Trust is a real estate investment trust, or REIT, that primarily owns or leases a portfolio of healthcare and senior living facilities. They are focused on providing a range of healthcare services. Their financial health, therefore, is closely tied to the performance of these facilities and the overall healthcare industry. While we do not get a full financial statement within this 8K itself, the investor presentation is where the company would typically highlight its key performance indicators. Given that this is a REIT, we would want to look for information on property occupancy rates, rental income, operating expenses, and any changes in their property portfolio. We would also want to see how their debt obligations, like those senior notes we mentioned earlier, are being managed. The fact that they are issuing an investor presentation on this date suggests they might be trying to communicate a particular message to the market. It could be about recent performance, a new strategic direction, or perhaps an update on their financial position. Being a REIT, DHC relies heavily on its ability to generate stable rental income and manage its properties efficiently. If occupancy rates are declining or operating costs are rising significantly, it could put pressure on their ability to pay dividends and service their debt. The presentation likely provides figures that can tell us if the company is growing, shrinking, or holding steady. We would be looking for trends in revenue net income and funds from operations, which is a key metric for REITs. Changes in these numbers, even small ones, can sometimes signal larger underlying issues or successes within the company. For instance, a consistent increase in rental income from existing properties known as same-store net operating income growth would be a very positive sign of underlying operational strength. Conversely, a decline might indicate challenges in leasing or operational inefficiencies. They also have a significant amount of debt. We would want to see how their earnings cover their interest payments. A healthy company will have a comfortable margin to ensure that even if earnings dip a bit, they can still meet their debt obligations. With notes due in 2042 and 2046, they have a long-term view on their financing, but managing that debt effectively is crucial. Typically, investor presentations also discuss challenges and risks. We would be looking for any commentary on regulatory changes in the healthcare sector, economic downturns that might affect tenant ability to pay, or competition from other healthcare providers and REITs. How they frame these risks and what mitigation strategies they present can be very telling about their management's foresight and strategic planning. For example, if they mention rising interest rates as a risk to their debt refinancing, we would want to see if they have a plan to lock in lower rates or if their debt is based on fixed rates. If they are facing increased competition, we would look for evidence of how they are differentiating their properties or services to maintain occupancy and rental rates. In essence, this filing, by pointing us to the investor presentation, is a signal that DHC wants us to look at their recent strategic and financial communication. The true story is within that presentation, and it is there we would find the numbers that explain whether the company is on solid ground or facing headwinds. The fact that it is delivered via a presentation format suggests they are attempting to proactively shape the narrative around their business. Now, looking at the broader picture, Diversified Healthcare Trust operates in a critical sector, healthcare and senior living. This sector is generally seen as having long-term growth potential due to an aging population. However, it is also heavily regulated and sensitive to economic conditions. For a company like DHC, success hinges on managing its real estate portfolio effectively, maintaining strong relationships with healthcare operators, and ensuring its properties are attractive and well maintained. The information in the investor deck will be key to understanding if they are successfully navigating these dynamics. So, to wrap up, this 8K filing itself is more of a pointer to DHC's investor presentation. The real insights into their current situation, financial performance, and future outlook will be found within that presentation. It is a signal that the company has new information to share, and investors should be paying close attention to what the company is saying about itself. This is not just about numbers, it is about the story the company is telling about its operations, its strategy, and its future prospects in a vital and complex industry. What are your thoughts on what this filing might be signaling from Diversified Healthcare Trust? Are you looking forward to checking out their investor presentation? Let me know your take in the comments below. If you found this breakdown helpful, please give this video a thumbs up and remember to subscribe for more in-depth corporate analyses. Don't forget to join our Discord community. The link is in the description where we continue these discussions. Thanks for watching, and I will see you in the next episode of Corporate Decoder.